It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital, and joining me today, the smartest guy in the room, Michael Becker.
Hey, Paul.
Michael, a listener writes into me and kind of wants to figure out what do lenders look for when approving an apartment loan? So what do lenders look for when approving an apartment loan? I thought we'd ask you that question since you've closed on over 4,000 apartment units.
Yeah, the lenders out there really when you're doing an apartment loan as a lender, they're really looking at two main areas: the sponsor and the management team, and then the property. So those are kind of the two different areas they look at. First, let's kind of talk about the team. So who's behind the team? So you as a deal sponsor, they want to look at you, any other guarantor or key principal that you bring along with you to sign on the note. They kind of want to look first collectively at your experience. Have you done this before? Or if you haven't done it, do you have someone on your team that has apartment ownership experience in their past? That's certainly one of the first questions they're going to want to look at. They're going to ask you for a schedule of real estate owns, kind of show all the other properties that you own. And if you're going out trying to get a Fannie Mae or Freddie Mac loan, they're going to want to have similar ownership experience of what the subject property you're trying to buy kind of in your past. And then if you don't have it, then one of the things that we'll look for is kind of who's on your team. So your management company is usually one of the key ways to get around that. So if you have a experienced management team that has management on similar assets in the area that you're looking to buy, that's usually a good mitigant to lack of experience. And then they also want to look at your net worth and your liquidity kind of on your balance sheet as your team who's going to sign on the loan. Kind of the rules of thumb that we always like to give out here is they want to have net worth equal to or greater than the loan amount. Then if you're doing a Fannie Mae loan, they want to have post-closing liquidity about 10% of the loan amount or greater. And the community banks usually want to have a little bit more liquidity, so 20 or 25% of the loan amount kind of post-closing. Those are some of the rules of thumb. And then secondarily, what the lender is going to look at is they're going to go to the property itself. So they're going to want to understand kind of historically how it's operated. So I want to look at things like a trailing 12 financial statement. So like the last 12 months broken out monthly of income and expenses on the property, as well as the current rent roll. They want to kind of see were you over 90% occupied, how the operation's been historically, and then they're going to also want to see your pro forma. So they're going to want to see that you're buying this property. How are you going to operate it going forward? Do you have some ways that you can save some of the operating expenses or the current ownership paying too much in insurance or the payroll too high, and you can be able to come in, buy the property, operate a little better, as well as they're going to want to come in and see like your capital expenditures budget. So they want to kind of see what kind of CapEx money you can put in the property. Is the property in pretty good shape, or does it need, have some deferred maintenance you need to come in and spend some money to cure? As well as if you're budgeting having like $100 rental increase a month, are you going to come in and upgrade your units and do some new appliances and flooring, things like that to be able to justify getting the higher rental rates versus how the current property operates. So that's really what they look at when the two phases. The lenders also typically they'll do 3 standard reports. They'll do an appraisal to kind of confirm the value and how your operating budget is at in line with what the market's going to be, a property condition report to make sure they understand what the physical condition of the asset is walking in, then environmental study to make sure that there's no material environmental issues on the property that could impair its future value. And then on top of that, most of the lenders will do background checks on everybody, not only credit, but they'll go do what they call UCC searches and check your background to make sure you're not a felon or have some sort of bankruptcy in your past that doesn't show up on a typical credit report. So those are some of the things when apartment lenders are looking what they want to see when they're out there trying to put a deal together.
One of the things also too, Mike, I don't know if you mentioned or not, is not only do they run a background check on you as the individual, but they do a background check on the property. And that's one of the things that they're looking for to kind of figure out with the crime reports, if there's been any violent crimes in and around on the property within a block radius, a mile radius. If there is, that could be a deal killer. So make sure you go on the internet and you research or call the city to kind of figure out if there's been any crime stats that are available out there. The other thing is I can give a strong indication of an interest on a loan approval based on the team approach of what you've assembled. If it's one guarantor or 2 guarantors that are going to be part of the transaction, you have to kind of tell us who's going to be on your team. So a pre-approval in multifamily really does not work. A pre-approval doesn't. It's not like a single family loan where it's based on the borrower's credit and income. 70% of the transaction is based on the property. So the occupancy history, like Mike was talking about, the location, the rehab budget, the pro forma for the rents and the expenses. And 30% is based on you and your team. What's your net worth as a group, your past multifamily experience, your personal liquidity, and the property management. Who's going to manage the asset? Are you going to manage yourself? So the lender wants to kind of figure out what's going on in this deal. So the best idea to get started is get your personal financial statement over to your lender and have a real in-depth discussion on what you want to do. So again, find out who your guarantors, your partners are going to be in this deal, and put together kind of a conversation with the lender and tell them what you want to do and make sure they're on board. Anything more to add to that, Mike?
No, that's pretty much sums it up. It's a team sport, and Old Capital and the guys over here, that's what we do for a living. We try to put these deals together and help you get your deal packaged in a way that is going to get the most high likelihood of approval and favorable terms. And that's certainly what a good, competent mortgage broker will do to help you along the way.
That's right. If you want to have any more information concerning how to put together a transaction, don't forget to ask for our 15-page white paper report called Multifamily Financing 101. Gives you kind of an outline of what's going on, how to finance apartment buildings, just gives you the background. Send us an email at info@oldcapitallending.com. Again, info@oldcapitallending.com, and we'll send it over to you and give you kind of an idea of what's going on and maybe give you an idea on a weekly basis about the transactions that we're closing. So you just kind of understand how these deals were put together. Anything more to add, Mike?
Yeah, the other thing that we really like to ask, if you find this information helpful, informative, if you can go to iTunes or Stitcher and give us a 5-star rating and write us a review, that really helps us kind of move up the rankings of iTunes and Stitcher and really get more and more people exposed to our podcast. That's certainly something that we'd be grateful if you would do.
And Mike, I don't know if I should ask you this, but would you be open to maybe once in a while having a discussion with somebody that wants to get into the business and how to do it?
Sure. If anyone wants to reach out, I don't mind having a brief conversation with some people. Probably the best way to reach me would just email me through my company where we do syndications and operate apartments. It's mbecker@spiadvisory.com. That's mbecker@spiadvisory.com.
Some great information, Mike. Thanks. Looking forward to our next Ask Mike Monday coming up next week. Thanks.